Welcome back. We are here for part two of our cocktail conversation. Most often asked question of how is the market,
The mortgage market,
which really relates to interest rates
Yep.
and all the things.
Yes.
And the big hot topic right now for a lot of people. In last episode, part one, we talked about the actual nitty gritty, the interest rate, what a difference a half a point makes, a quarter point,
Timing the market. Yeah.
these sorts of things. Now let's talk about the actual mortgage types,
Okay.
because we hear a lot. Oh, there's a fireman, police, teacher loan. There's a doctor loan. There's a first-time homebuyer loan.
Right.
There's all these different kinds of lending vehicles. Golly, talk. Go, Maestro.
Yeah, we if you really want to fall asleep, you're going to listen to me drone on for hours about the different loan programs. I mean, it's almost indefinite. I mean, infinite, the number of different products that are out there. Not to mention self-employed loans, different ones in that realm. I mean, there's loans for pretty much everybody out there.
Is it
Okay.
true?
Yeah.
I was about to say, not to interrupt you, but now I did. That there was an artist can have a home loan. They can earn a home loan by way of like the number of commissions they've got in the docket, and or also referencing their body of work. Talking about all the different kinds of loans.
They could do perhaps a bank statement loan, which shows how much money was coming into their bank, into their bank accounts from outside, from things that you can reference as our income. There are very creative products out there. Let's
So
put
that
it
would
like
be
that.
kind of along the lines of a self-employment loan then.
Right.
It sounds like.
Right. But you have to have good credit, because your credit score is still a very important factor in all that. Being creative with your financing only works when you have a good credit history. Otherwise, you're too much of a risk.
So even if it's an affordable housing loan or whatever else, it still goes down to how responsible you
No,
are on a day-to-day basis.
on that part of it, if you're a first-time home buyer, there are programs out there that give you grace for not having the greatest credit score. And by the way, a first-time home buyer is actually somebody that's defined as somebody who has not had ownership in a real estate property in the last 4 years.
4, not 7.
So 4 years. So
seven was
if you decided to sell your property and then rent for 4 years, and then you want to buy a property, you qualify for first-time home buyer.
First-time home.
And let's talk about first-time home buyer programs. There's several out there, different ones. Some of them are based on grants that you can get, right? So to help with down payment and closing costs. Some of them are based on how much income you make. Some of them are based on the property area where you're buying.
Like an incentive area.
Right. There's an incentive area based around the incentivizing lower income to buy property. Some are based on your current location, interestingly enough, where you currently live. What is your income level compared to the rest of that neighborhood? And that qualifies for a program. There's from time to time, there's programs out there for first-time home buyers, 1% down payment. Those come and go depending on how much the investors want that loan. So there's programs for first-time home buyers. There's programs for really the special groups such as first responders that you mentioned, teachers. My argument with that is typically it's a marketing ploy to make the phone ring. It's not so much that it's a special program.
No kidding.
And sometimes when I compare those to what I can provide on a regular basis, it's a better deal to go with a regular loan than with that special program. One caveat to that is what I do is with first responders and teachers is out of my income from that loan, the money I earn, I pay part of their closing costs with that to help them out because it's hard. It's hard to sometimes in those professions to actually purchase a home. So especially teachers have, with their income, have a hard time qualifying a lot of times. So I help out with that, or they can use it to buy down the rate or whatever. So I do that on that front. Veterans, unfortunately, in my industry, a lot of times get a raw deal, which is very unfortunate. And there's, if you want to know more about that, call me up. Let's talk about it. I don't want to do that on the air, so to speak. But be careful. If you're a veteran out there, be careful.
Short answer too is because I get asked this a lot as a real estate professional. Can you use your VA loan more than once? Yes, you can.
Yes.
Yes. Should you?
I
don't know. That's a Mark conversation.
The other one I get is there a credit score? No, there isn't. Is there a max loan amount? No, there isn't. Can I do zero down? Yes, you can. Most likely.
And if you're in Texas buying, which is where we're at, is in Texas. Texas has its own veteran.
Yeah.
We Love You programs as well.
And I usually will structure veteran loans where they purchase a home, and when they're done purchasing the home, they're debt free. They're completely debt free. So if you're interested in buying a home and being debt free at the same time, you reach out to me. I'll show you how.
Really?
So Vets is another program that's near to my heart. I love helping them. Let's see, what other programs? We talked about grant programs. They come and go.
Doctor program.
The doctor program, that typically is a specific bank that wants to capture their investments. And so they make sweetheart deals but they get paid on the investments. So there's no free lunch. We all know that. Mm-hmm. So if anybody's offering you something that's spectacular, it probably means they're making money somewhere else, right? So ask questions. What are the stipulations? What do I need to do to get this loan? But doctor loans can be very helpful because some of the banks out there will not incorporate your student loans and your debt to income ratio, right? So they don't count that against you, right? And to make it easier for people to qualify for a loan, because they know that holds them back. I mean, if you have $500,000 in student loans, that's a big chunk of your income going to pay those off. Those banks are kind of ignoring that and saying, hey, you can still buy a house. Not sure that's always a wise investment on their part, but I'm not the bank. So I'm just paid to shop around and get you the best deal. So I don't make those decisions. It may not even be a good deal for you as a doctor or a nurse to do those deals, because think about it. If you're paying a big house payment and you have that debt on top of it, is that really how you want to live your life?
Literally enslaved by debt.
Right. So I would argue, yeah, it's okay to get pre-qualified, but is it really a smart move financially? So just think about that. What else? What other special programs do we have? We have programs for if you want to buy commercial property.
Really?
If you want to buy
How about the barn dominium craze going on right now in Texas?
Yes, we can do all of that.
And how does that work? Because usually the barn dominiums, because it is a relatively new housing sector, you have to buy the land first before you can even start drilling the well and all the other parts.
It depends on the bank. Very specific, very specific guidelines to that, because they're non-conforming loans, meaning they don't fit into the generic mortgage box.
So when you say non-conforming, here's a quick hack I have learned from Mark. What he's really saying is it's going to cost you more money to get the loan. Yes. So like land, for instance, you've said it's like, what is it, like at minimum 25% down cash out of your pocket to snag the land?
As with investment properties, you can do things, but do you really want to pay that much? Bottom line is, whatever your situation is, talk to a professional to see what creative ways are out there. Mm-hmm. They may not always be what you want to hear.
So despite what you hear on all the different, there's so many real estate and mortgage media places out there, especially online.
Right.
Lending is much more of a let's figure this out and not so inside the box thinking.
You got to peel the onion. You got to literally not just, and it goes beyond just, do I qualify? It goes beyond that. It goes into, does it make sense for you in the long run? Does it make sense in your financial picture? Does it make sense in your goals and what you want to achieve? You know, I mean, it goes further than just, hey, pray approve me for a loan.
Right.
You know, and so sometimes people have it in their mind, they want to buy investment property, for example, but then when I kind of walk them through what that means, then they go, well, maybe that's not for me. Because they followed some guru on Instagram that said buy investment properties, and they're off on that tangent, right? And so you got to have people in your life that can say, hey, is this really what you want to do? Because here's what the reality looks like, unlike what they sold you in their seminar.
Right.
You know, so again, there's probably a loan for you out there. It just depends on if you want to do it. Do you want to have that loan?
Do you want to put in the work? Do you want to put in the homework?
Right. And there are times when people are just not ready to buy a home, but it's a good idea to see what kind of cards are you playing with. What kind of cards are you actually holding?
That brings to mind a quick share for y'all of recent application of this. We were helping a young gentleman that's been working his tail off, and he owns his own business, landscape business, and it's growing, but he's not quite there. Not quite there, because it's equipment that has to be bought, and there's this and there's this, and so his accounts are sometimes running a little thin, even though his overall cash flow positive.
What I see most often with self-employed buyers is that they write off everything, which makes sense from a tax standpoint, right? You want to write off,
income is zero.
But their income is zero, you know, and sometimes it's negative.
It's hard it's hard to get the bank excited about writing you a check.
Yeah, not so much. Now you can still get your mortgage, and the last time I did that, I compared what, you know, with his credit score and everything else, the regular loan, if he had structured his tax returns in such a way that showed enough income for him to qualify for a regular mortgage, he was right at 7.5% interest rate, given his situation and all that. With a creative loan, he was going to be at 8.75. Okay, so a full percentage point higher to get into that home. Now, he chose not to do that. The math still worked in terms of appreciation, how long he wanted to live there, and all, so on and so forth. Again, 4 or 5 years fast forward, he would have been ahead of the game, even at that interest rate. And I told him, look, next tax return, just restructure your income. We'll refinance it into a regular loan, you know, but he didn't want to do it.
Didn't want to do it this time. So it wasn't the right time.
Yeah.
You don't ever want to force a door open.
So long story short, if you have a situation, you know, whatever your situation is, let's talk. Let's figure out a game plan to get you into a home. It may not be this year, maybe next year. It may be further out. It may be immediate. Who knows? But at least you know what you're dealing with, and you're not procrastinating, and you're not thinking about, I wish I had bought a home.
Amen.
You know, so
be strategic.
There you go.
And speaking of strategic, you know, you can be strategic on your property taxes.
Really? Tell us more. Because nobody likes to pay interest or taxes.
Interest and taxes, which is, by the way, all part of your mortgage payment.
Yes.
Which is part of your discussion.
Yes.
And so this is a picture of a home that is in a multi-million-dollar neighborhood. Okay. And this home, according to the appraisal district, is ranked fair condition.
Okay.
All right. Because if you look at it, is it? We've all been Pinteresting.
It's not dilapidated. It's not falling apart. So yeah.
So it's not poor.
Right.
Okay. So so every house, every
gets
appraisal
graded.
district has a grade. So so your property tax rate is going to be the same from house to house house.
The actual percentage
in an area, right?
Right.
But then you're based on the value of the house. And so inside that district, there's great, there's good, there's fair, there's poor. So this one's ranked fair.
Okay.
And so it is, and how do they come about that? They compared this house to the nicest, perceived by the appraiser by a drive-by.
Yeah.
What the nicest house in the neighborhood is, which happens to be one that was
relative
built
to
in
that.
2022.
Okay.
And it's 2 stories.
Not a
And
fair
it's
comparison. Okay. Yeah. But
okay, so now you see why this one's ranked fair. All right. And so, and this property owner is astute, and he has been doing some updating. He has chosen not to do anything in the front.
okay.
Because
To make
he
it look-
likes the fact that his house looks like awful on the outside. Because he said, one, it generally helps the thieves choose, burglars to choose
Right. A different house.
the neighbor. But it also helps the tax man choose the neighbor as the benchmark.
That's an interesting way to
Yes.
look at things. Okay. All right. All
So
right.
you and I both get calls all the time on how to beat up the property tax guy. Well, there you go. That's one way to do it.
There's one way to do it.
Is to be the neighbor on the street that everybody can't stand because you don't take care of the front of your house. So if you can take that heat,
All right.
you can save
More
some
power to
dollars
you.
in your pocket.
Save a little bit of money.
Save a little bit of money. And you need to save money when you want to buy a house. That's important.
Yes.
And we are so glad you joined us for part 2.
Thanks for
of
coming.
How to get it done. There you go.
We'll see you next time.
Next
Like
time.
and subscribe down below.